All right, good morning, guys. Today is Wednesday, September 20th, going over analysis for US 30, gold, and EU. So currently, I'm still in this EU trade from yesterday. So we entered this trade with 0.375% risk. Given that also today's FOMC, I was looking for this trade to come back to around break even and close it out. But I'm still in it. But anyway, the risk was pretty minimal. So it was only 0.375. So nothing major. Given that today is FOMC, I don't really want to take any, especially the FOMC release with the conference at 2:30. I really don't. I would rather save my leverage till later. But yesterday, the trade I sent out for US 30, it was such a good trade. It was down here. And it was there was a double SAR right here. It was a test and rejection. So when I turned on the markups yesterday, I did see we had this daily bullish high and low. So what they did, they just manipulated us from the trade, faked out, and then US 30 pumped from there on. So yeah, in future, this daily 4 hour, especially the daily and maybe monthly order blocks, especially when they're this close to each other, they're only like 40 pips away. But that just manipulated. But I was able to hop in again on a buy. I know it wasn't an official trade, but I was able to hop in again on the same trade and make back the loss and even more. But for today, so daily bias for me, US 30 still bullish. Daily bias on gold for me still bearish. EU bearish. The dollar bullish. Going down to the 1 hour and 4 hour time frames. Let me redo this zones. It's been a minute. So I'll redo all of these zones. Here. So start on the 4 hour time frame and look for the double SARs at least. So that's one for the 4 hour. What else do we have? Let's see here. Just 1 second. 4 hour. So that's on US 30. The other 4 hours are, I'll just mark the ones that are pretty close to price, or you know what, I'll just mark everything. 845, that's 30 pip zone. So these are 4 hour zones. Yeah, nothing really based off of where price is at. 1 hour zones, we have some 690, 677. So we have this zone right here. That zone. That 1 hour, there's this one as well. Yeah, I don't see anything else based off of where price is at. For US 30, gold is pumping, so gold is bearish. So marking up the bearish zones on gold. This is the hourly time frame. Right there, there's another zone here. There. That one here. This is 1929, 28. This is also one. Zone right here, 38, 37. Let's see, 39.8, 30. Right, so those are the 1 hour zones for gold. I'm not gonna mark up EU for now. Just gonna hold off on EU because I wanna go down to the 15-minute and 30-minute time frames for gold and US 30. So for the 4 hour for gold, I have that zone. 4 hour, that zone as well. 1817, there should be a 4 hour zone as well. Then we have this 4 hour zone here. Yeah, it's a bunch of them for gold, 47, 45. All right, so marked up the 1 hour and 4 hours on gold. Let me go down to the 30-minute and 15-minute for gold as well. So 30-minute, bullish zones. This one right here. Oh, let me turn off the markups. Too many lines. Trying to find those. So there's this zone, triple SAR. This is the 30-minute. The triple SAR right here. Then a double SAR, that's right here. And another double SAR all the way at the top here. See, 15-minute. This might be a break and continuation. I can already see a triple SAR buy right here. So this already broke. Actually, it's a 1, 2, 3, 4. This is a quadruple break, possible break and continuation trade. But this is in the next 13 minutes. See, not sure I'm gonna take trades today due to FOMC because I do anticipate liquidity to die down at around 12 noon. But anyway, let me keep marking that up. We have 13 minutes until that candle closes. So that's a quadruple by SAR zone on the 15-minute. Let me find other zones. There's this one right here. The top one is 654, bottom one 650. So that's a 4 pip zone. Perfect. There's another. Damn, US 30 has had a bunch of zones lately. 659, 662. This is a triple. No, I'll just mark this double. There's another double right here on the 15-minute time frame. Yeah, I think that's pretty much it for US 30. So I don't want this candle to close too high up. If it does, and I want to reduce this line. There's just two, but I've already marked up the line, so I'll reduce them just to have a clearer chart. But that's the zone right here. For gold, looking for sell zones. So ideally where price is up there, there's nothing. You know what? There actually is a zone right here on the 30-minute. And I think Steven was also looking for sells around this zone. So we have also quadruple sell zone on the 30-minute. But for this to validate, you'd need 45 more minutes. So you'd expect a test and possible test and rejection for gold up here. So this trade wouldn't even show up until 45 minutes from now. So I'm not really 37, 39. No, that's a bit too wide. There's this zone here. 36, 35, that's a 10 pip zone on the 30-minute. Then I come back down again. There's another zone right here for the 30-minute. 15-minute zone. There's nothing where price is at right now on the 15-minute other than this zone right here. So that's 35 and 35. Yeah, so I don't see anything on gold anytime soon. Maybe that 45-minute entry on the 30-minute time frame, but right now there's nothing. So we'll see how this US 31 closes. If it closes too far up, I'm not taking it. I want to take this trade. If I do take it, I would like to take it somewhere down here, but I would rather save my leverage for FOMC. Yeah, but gold, and I see Steven join. Steven, you're looking for, and I remember on your markups, you're looking for some sells around here, 1938, 1940 area, if I'm not wrong.
Can you hear me?
Yeah.
Yeah, I'm actually looking for some around here, but I have to see, it has to show me what I need to see before I enter. I'm not going to blindly just enter right now.
Yep. Yeah, same here, because I see a sell zone up here, 45 to 43. But for me to even look to enter it, it would have to be 45 minutes from now, because this is a 30-minute candle.
Don't forget, we also have
Yep.
FOMC.
FOMC, yeah. So I don't even want to trade to like right now per se. I would rather wait for 2 p.m. or 2:30.
Yeah, take your time. There's going to be lots of opportunities these next 3 days.
Yeah. 44, 44. This is 43, 42. Yeah, so it's actually two zones up there. Yeah, so the only trade, if any, that I will probably, but I would have to see. So if this 30-minute, 15-minute candle closes, that's a valid buy on US 30, but it's too high for me. So this, ideally, if I'm looking to buy, I would want to wait for price to come back down to 644. But even then, I would not enter with the same risk that I will enter with. So yesterday's trade was actually perfect. We just got, because we caught it, the entry was right here, got faked out, and then came back all the way up. But yesterday's it was ideally around the bottom, but just got manipulated down. Yeah, so we'll see if this trade validates. If it does, I'm not going to enter it on impulse. So I'm not going, as much as it's valid, I would want to wait to get a retracement. And given that it's FOMC, I do expect US 30 to keep pumping up. If US 30 is going to drop, I don't think they're going to drop it right now. I think they're going to pump up US 30. And then if it's supposed to drop, maybe during FOMC at 2 p.m., they push it up. And then at 2:30, when we have that news conference, they bring it all the way back down. So I think buys, or whatever direction any asset is trending right now, I think it's better to follow if you get a trade in. I mean, ideally for me, I'm looking for sells on gold, so I'm not looking for buys. But since I'm looking for buys on US 30, I do expect US 30 to keep trending up, possibly through like 215. And then if US 30 is supposed to drop, it will probably drop like at that 2:30 p.m. news conference. So that's why I'm not scared, or I wouldn't be wary of taking this buy if it does come back down.
Yeah, generally we see consolidation now and then basically, what is that, at 2 o'clock your guys' time? We see a false move in the wrong direction, and then
Yep,
30 minutes later we see the opposite.
the opposite, yeah. Yes, because that's the other thing too. Like if I'm going to enter a buy on US30 and my TP is 100 pips, I'm not sure that's going to hit before, right? Because as you say, that consolidation, I'm not sure the TP is going to hit before FOMC happens. Yeah, that being pushed up. I was hoping it closed lower. Yeah,
Yeah,
so
I'm
for
only EU right now.
you say you're long on EU.
Yeah.
Yeah, I'd taken a short on EU yesterday, but it was just like 0.3% or 0.37 risk. This one right here is I mean, it's even too early to mark this up. But if this candle closes below this zone, that's the test candle, then you would need another 30-minute candle to also close below that particular zone to even think of entering anything. Yeah, but even for this stop loss, even with a 30 pip stop, this can easily be manipulated too. Oh man, oh gold. Like if you look at gold on the 1 minute, it's crazy. I just looked at some of my charts. It is all the way up there. Yeah, like on the 1 minute, gold is pumped up all the way there. This 15-minute candle closes at, yeah, you in the next 4 minutes, unless something drastic happens and brings US30 back down, I will go down to the 1 minute time frame and wait for a break and continuation. So what I would want to see here is this coming around here, and then get a 1 minute break and continuation of a live SAR to ride it back up. Also, for me, if gold, depending on how this daily candle closes for me, if this daily candle closes above this buy SAR for today, tomorrow my bias for gold might switch to bullish. But the best thing is that we have FOMC today. So this daily candle might not actually close above here. Yeah. So not sure we're gonna get anything. So for this US31, it's pumping too high. Yeah. And by the time it comes back, because we probably are going to get that consolidation or lack of liquidity in the market for the next, like from 11 a.m. or 12 p.m. By the time it's coming back to this zone, it might be during FOMC time. So as much as this, when this candle closes, yes, that's a buy for US30. But if you're willing to take the risk, because for me, if I do enter that trade here, the SARs I'm trading are all the way down here. So the distance between my entry and my SARs, that is like 95% of my stop loss. So that's not like a risk I'm willing to take. I mean, given the price action I'm expecting today, if maybe I was high or something, I would enter it because I do expect it to keep going up. But since I'm not high or anything, I'm not willing to take that risk. And of course, I know there's going to be trading opportunities tomorrow and the day after on Friday, and also after FOMC, like at 2:30, 2:45 actually, 2:45. If I were to get possibly like this test and rejection entry at 2:45 or at that would be 3 p.m. But I don't trade from 3 p.m. But if I were to get this test and rejection on the 30-minute time frame on what is it? During a time that's after FOMC when I would normally trade, I would, like this is a trade I would take. But you can see we are rejecting exactly from those double SARs on the 30-minute time frame. So came there, tried to break above, but you can see it's being held down. But you always, unless you're like an impulse trader or you scalp, which for me, I haven't scalped in a minute. For me, I just want to see such rejections, and then I know that the trade is valid, or the setup, the zone that I'm looking to trade is a nice rejection zone. And then I would have to wait for this 30-minute candle. And then I would hope that the next 30-minute candle does not close above there. And then I go ahead. If it doesn't, then I would enter on the third 30-minute candle. But for example, let's assume that this candle closes this way, and then the next 30-minute candle, which is supposed to be the rejection candle, goes ahead and closes above that zone. That trade becomes invalid. So the key thing is for both the test and rejection candles, consecutive candles to close below this zone that I've highlighted there. So you can see we have this zone here. We also have a triple SAR sell zone above that zone as well. So I got stopped out of the EU trade we'd taken yesterday. So we took it with a 0.375. So on a 200K account, that's just 750. So that is what, give me a second. Let me record that. So yesterday was Tuesday, 375. Man, I hate doing math with odd numbers. All right, so that's just 1.125. So just negative 1.125 for yesterday. But as much as that is right, with the proper risk to reward ratio, so you can see last week had a 5% return. This week, as much as we've taken 2 L's yesterday and 1 L on Monday, is just like 1.8% loss. So if you were taking trades with me this whole September, you'd still be up on 100K, you'd still be up like 2,785. So it's all a matter. You just need like to win with a proper risk to reward. You just need to win more than you're losing. So here, this 30-minute candle, we already got the test candle. So for this rejection candle, you would want in the next 30 minutes, this 30-minute candle to not close above this zone. If it closes above this zone, then you'd either wait for like a break and continuation entry, which because if it closes above this zone and you want to trade this zone, the zone would be below price. So you'd wait for a break and continuation entry. So it would switch from a test and rejection. If, for example, this candle were to close above here, the entry would switch from a test and rejection to a break and continuation. So this one is yeah, so you can see it pumped up, right? So this is what I was taking. If I wasn't in my right mind, or if I was under the influence of something, I would have entered that trade, because the trade is valid, because these are the SARs down here that we are trading or we were looking at. But it's always about how much do you want to risk? Because I did tell you guys that whatever direction all these instruments are going now, more than likely they'll keep going in that direction until 2:15 p.m. and then or start, keep going up right now, and from 11 to 12 start getting that consolidation. But the zones where that trade was based off of is this. So it was a quadruple. So you can see 1, 2, 3, 4. 4 by SAR zones. I am bullish on US 30, so I'm looking for 2 candle closures above this zone. So this first candle closure, and I like it because it has a long wick from the bottom. So that's the break candle. So break and continuation. So this would be an example, and I'm not in that trade, but I'm just demoing to you how I would have analyzed that trade. So this right here would be a break and continuation. I'll just change this to, so break. Of a double by SCR, and then let me save this real quick. Oh, wait, do I already have it now? Oh, I'm so dumb. Never mind. Already have one in there. All right, so for that 15-minute time frame, possible break and continuation. So this first candle, that's your break candle. Then your continuation candle. So remember, always 2 consecutive candles. That's the continuation candle. So at that point, you have the trade has validated. I'll go ahead and turn off the extension because at this point, it just has too many SAR. So you guys already saw this is the zone that the trade would have been based off of. Now, as much as that trade is valid, you'd always ask yourself, between when you're entering and the SARs you're trading, what is the distance? So for me, anything, if my entry point relative to my SARs is like 70%, even 60% of my stop loss, that's a red flag. So ideally, I would have wanted this 15-minute candle to close somewhere next to this SARs that I would have been trading. And at that point, I would have entered like right there, because ideally you want your entry point to be as close to your SARs as possible, because that gives you can give you a nice risk to reward, because you don't have to do like a 50 pip stop loss that I do. You can do like a stop loss maybe below this high low or low that's right here, because remember, the major rule is make sure your stop loss is at the very least below your SARs or below the previous high low. So either there, you can do it below the low of this candle, you can do it below of this candle, or even this candle. But the best thing with your entry being next to the SCRs you're trading, you can get away with like such a tight stop loss. I think I've done tests here or examples here where you could have gotten away with like a 9 pip stop on US30, especially, and this is mostly, especially on Asian session, you can get away with those. But for me, if I'm doing like a 50 pip stop that's right there, and my entry is all the way up there, then I have a decision to make. It's either I take the risk and enter with my the normal risk that I would take. In this case, since nowadays I risk 0.75% per trade. So it's either I do that and know that my stop loss or the distance between my entry and the SARs is like 90% of my stop loss. And then I'm like, are you willing, if that trade hits stop loss, will you come back to yourself and say, I should have waited? If I say I'm okay with it, with taking the risk, then I would do that. You can either do that, or you can say, okay, I think your study will keep pumping up, but just to be safe, instead of risking 0.75%, like what we did with EU yesterday, instead of risking 0.75%, I will risk half of that, or I'll even risk 0.2%. And if price retraces back down, I will start scaling into my position with the remaining risk. Or if you don't want to do that, you can do what we've done a couple of times, is say, I'll wait for my entry here and I'll wait for the retracement down, and then I'll drop down to the 1 minute or 5 minute time frame, and then I'll wait for a live 2 consecutive candles to close above a live SAR. So for example, like what happened here. So you'd wait for price to retrace back down, possibly to your entry zone. And then you see what happened here, because this is a live 5 minute SAR, you'd wait for a break and continuation. So 2 consecutive candles to validate on the 1 minute time frame or 5 minute time frame, and then you go ahead and enter that trade. But for me, so I'm not in that trade. It's a valid entry, but for me, it's too far up. So I would like to wait for that trade down here. So gold, the best case scenario for that 30-minute entry on gold, and I don't know if it's going to, I may not be able to stay on the live session for that long, but if this 30-minute candle, current 30-minute candle closes below 1942.8, that is a valid, and hopefully closes close enough, that would be a valid sell on gold. What I would advise is that you don't enter with your max risk because of FOMC later on today, or enter instead, because for me, gold, I do like a 30 pip stop. So if you're going to enter, you can still risk 0.5, 0.75, but instead of doing a 30 pip stop, you can do like a 60 pip stop or something. But if this current 30-minute candle closes below here, below 1942.85, 805, that is a valid test and rejection. So another example of what you'd be looking for. So you guys remember this trade I sent to you yesterday. So this was a test and rejection, and we'd mentioned it on the live session yesterday. So here on the 30-minute, we had this actually triple SARs, 1, 2, 3. So the top one was at 1935.9. The bottom one was at 1935.1. So that is, God, what is that? 7 pip zone. So on the 30-minute, what did we see? So I'll just replay this real quick. So, and this happened after the live session, and I actually entered that trade. So what happened is, let me delete this one because this is a 15-minute. So here, this zone here was the 30-minute zone. So if you play it, you'll see that this candle, this current 30-minute candle, see, keep going. Okay. Now, where did that candle close? So this one was a test. Let's see where the low of that, it's at. Give me 1 second right here. I want to make sure it's, okay, perfect. Now, this was an example of this candle tested this whole zone and closed below, and then the next candle rejected from it. So technically, this was the valid sell right there. But if I'm using a 30 pip stop, obviously that's not a trade I would have entered, because as much as this candle closed here, the SARs I'm trading are all the way up here. So in this instance, you wait for price to come back up and wait for price action here. So if we keep replaying the trades here, you would see what happened next. So what happened next, the next 30-minute candle. So you see, if you entered here, automatically stopped out. But then when the next 30-minute candle closed, there was another test and rejection. So this was the initial test candle. This was the rejection candle. But also the rejection candle relative to the next candle, the rejection candle also tested that zone and closed below. And then the rejection candle tested that zone also and rejected. So in this instance, you had another test and rejection. So at that point, that was the trade to be taken right there. And this is when I talk about, ideally, you want the entry to be next to your SAR. So if you look at this, it allowed me to have my 30 pip stop way above the SARs and even way above the top SAR. So when you replay this, you can see that this trade automatically went into profit, and you would have set break even when you achieved a 1:1, and it came back and hit full TP and reversed all the way back up. So I took this trade, but when I took it, unfortunately for me, I saw this trade when the trade was somewhere around here. So literally during Asia session, this is what happened to my trade. Price came, touched my TP right there, but due to slippage, I didn't get taken out of the trade. So when I woke up this morning, the trade was somewhere back here. So I just ended up closing for like 300 profit. But you can see the importance of, if you get that entry that's so close to your SARs, that's that point you just jump in. The ones you want to be wary of is if the entry is coming a bit further. But those ones that the trade, the entry is so close to your SAR, you can take that risk, or not risk. You can jump into the trade and not want to wait for a retracement, because here, if you waited for that retracement here, you would have never gotten that retracement for that trade. So that, always ask yourself, based off of where my entry is, how far are the SARs that I'm trading? But ideally, the same thing that happened here on the 30-minute time frame, that's what you want or you're looking for here for this sell trade on gold. So gold can keep pumping. This is perfect. I would rather gold to keep pumping up, but the last 5 minutes of this 30-minute candle, I would want to see a lot of selling pressure on gold or heavy sell pressure, and to have like this 30-minute candle close like somewhere around there. And at that point, I would go ahead and enter the sell. Now, the question will be, what risk will you take? If it was a normal trading day, I would enter with my full 0.75% per trade. But knowing that we have FOMC later on, you want to be cautious. So maybe start off with 0.25%. With a 1:2 risk to reward, if you win with a 0.25%, you make a nice 0.5%. Let's see what's, so there's also, so similar to what happened yesterday with the US 30 trade, we also have a daily bearish low OB right here. If I turn on the zones indicator, I would want to see a bunch of sellers or a bunch of resistance or supply there. So you can see it's just a bunch of sellers sitting, especially you see this zone, 1946 zone, 1944 zone. We have a bunch of sellers sitting here. And they also have a daily bearish order block at 1941.2. So the sell to me is looking pretty nice. Of course, the red flag is FOMC later on. So I'm not going to be able to stay on the live session for the next 15 minutes. But if you guys have any questions, feel free to ask. If this trade comes in for me, I don't know. I won't, I'll take it, but I don't know if I'm going to send it out as a live trade, because I'm trying to think what risk I would want you guys to take. But if you do take it, I would say start off with a 0.25% risk. On a 200K, that's $500. On a 100K, that's $250. So it's not really going to damage you. And then what I would say is wait after FOMC, because what might happen, gold can blast through this. So this trade can even validate, you get tapped in, and then during FOMC, something like this happens, and then something like this happens. So I think you'd rather wait for like 245 so that you avoid getting faked out. And if price breaks above this zone, guess what you'll be waiting for? The zone is still valid because you have a double SAR here, you have a triple SAR here, but now instead of getting a test and rejection entry, you would be getting a break and continuation for a sell. So ideally, if this would happen, what you'd be anticipating is for a 30-minute candle to break and close below here. Then you'd want the continuation candle to also break and close here, and then you'd get the same sell entry. So there's no need to jump in if you're not sure of what risk you want to take. But if you're sure and you know how to manage risk and you know how you can get back the trade in case you lose, feel free to hop in. So I think for me, I'll just take it on my own personal account. But if the trade does validate later on in the day, like after FOMC, I'll send it out as an official trade. Yeah. Let me know if you guys have any questions. If not, that's going to be it for the day. And look at that, EU just comes back. So EU also, let me do a final markup of EU. I know I started off marking up, and if you guys have any questions, you can just ask. I'd started off marking up gold and US 30. So EU on the hourly time frame, where EU currently is rejecting from, there's a double SAR there. On the hourly, there's another double SAR sell zone here on EU. I think that's pretty much it. That's the hourly time frame. Then the 4-hour time frame. 4-hour time frame, we have a triple sell SAR here. So I'll just box this in. And that's pretty much it. Oh, gold on the hourly too. You have a test and rejection. So if you guys can see that, so that's it for you. Gold on the hourly time frame, same thing. If so this is pretty clear right there. So in any case, I think I would rather wait for the hourly entry and not the 30-minute entry. Nope. Let's see if you guys can see that. This is a test because it tested and closed below this double SAR on the hourly. This current hourly candle is trying to break and close above. If it does not break and close above that zone in the next 41 minutes, that would validate as a test and rejection entry on the hourly time frame. But just know, you can see we have other sell zones on gold up here, and this look like they're on the 4-hour time frame. And that 4-hour time frame, what does it line up with? It lines up with FOMC and lines up with post FOMC. So we have a double SAR 1949 zone, 1949 area, and we have another double SAR 1945, 47 area. But on the hourly time frame, if this closes below there, that's another entry on gold. So just think about it. Think about, if you're in doubt, stay away and just wait for post FOMC. Let me know if there are any other questions or last questions. If not, I will catch you guys tomorrow. Here. Okay, yeah, so nothing on US30 as well. All right, guys. I'll catch you guys tomorrow. Trade safe as always. If you guys have any questions, feel free to post them in the Discord. All right, bye, guys.